Good afternoon. Here we are taking a quick look at the S&P. Now, we know that the monthly charts were awful in December and we reached the lows of 2346. Now, if you see where this was, you can see that that 200-week moving average came in at 2350. So you can see where we just about clipped it there, but had quite a good strong close. Now at the moment, currently pre-open, we're trading at 24.65. So if we continue to be up at those higher levels, we are going to be above the weekly pivot, which is coming in at 24.50. Now the daily pivot is at 24.99, so we're below that, but we'll have a look at that on the daily chart. Now, you've got the 38.2, and that's coming in, as you can see, at 25.07. You've got the monthly pivot coming in at 25.50. So, even though there could be a case for a correction, you know, how far can this thing correct higher? It doesn't look bid on the monthly chart at all. If I just give you a quick look at it, I mean, that really doesn't look at all well. And it really is only that 200-week moving average that held it, because the monthly pivot level, the monthly fib level at 24.08 didn't. So you've got this huge move down in December. So now we really have to wait and see where the market decides to take us. If we look at the monthly indicators, they are all pointing lower. They are. All of them diverged, which means that as the market went higher, here, these didn't. So we saw divergence on the monthly charts, which really isn't a good idea for somebody who wants to go out and buy it. So let's go back to the weekly now. So here we are back at the weekly chart. Now where can we go? What is our level that we're going to be looking at? The first one, I think, is got to be this 24.99, which is the daily pivot. We've got to look at that one. We're trading below it at the moment, but we are trading above the weekly pivot. So as I always say, until the market opens, you can see yesterday's action is like very, very small. So until the market opens, we sit back and we have a little look and see where it goes. Normally within the first hour, it shows us what we're going to be doing for the rest of the week. So we'll have a look at the daily now and see if we can condense it. So if we take a look at our daily chart, there's the 24.99 daily pivot. But look over here what happened on the last day virtually of the year. We hit the 38.2. The level was 25.19. We saw highs of 25.20. Now, in saying this, markets do retrace back 38.2. That's quite not unusual. Bouncing off that 200-week moving average was very important, but we couldn't get above that 38.2, and we're going to open up. If we continue to trade around the levels that we're trading, we're going to open up down even below yesterday's low. So, you know, I think today is possibly the first day that everybody's been back to work. We've got the 9-day period moving average that's coming in at 24.70. We're below there. Our real one we've got to look at, I think, is this 24.53 to 24.50. I do believe that if we cannot break or hold above there, then we're going to go back and we're going to have a look at those lows again. Now, if you look at the rate of change and the stochastics and the RSI, you can see they're all off of the floor, which is quite a good thing. And as you can see, you know, you had two very strong days here after it had closed at the lows on that 200 weekly moving average. But as I say, here is going to be the test for us. If it doesn't hold, we're going back there, as we've already completed the 38.2. If we do hold this, then there is a chance that we can go back and test that 25.20 once more. Okay, good luck. I will catch you all tomorrow.